engineering. It's to recognize what an edge is, to try and recognize how many edges we can build into any one trade, what a maximum number of edges are. And obviously from that book divergence, we've got to try and understand book divergence. That's what we're going to be doing today. We're going to be adding it to yesterday's classroom on simply the other order flow elements. We're going to be building out those elements. And then this afternoon, we're also going to be adding volume and value at price, volume and value at price. And we're going to be looking at edges that you can make from those volume reads. The key to this is, it's not about one aspect of this. It's about adding the volume and value at price to the book story, to the order flow story. Order flow as in traded order flow. The idea of leans, the idea of deltas, the idea of price action. Every single one of these aspects gives us a lean, an edge, an opportunity to get a trade on the books. The more edges, the bigger the probability of success from that trade. And this is when we come up with these maximum all-in 100% winners, maximum all-in 100% confidence that we're getting the right trade at the right price. And this is what we're trying to get you guys to really consider, is that there's a lot of edges to be had. How many are you using on any one of your trades? Just one or two? Well, you can still make money, but you're obviously not going to be making as much money as you could be making if you added in extra edges and you started to recognize the opportunity to do bigger size or better size trades, more in line with the kind of trades that should be getting. In other words, if you've got a small edge, you do a small trade. If you've got a big edge, you do a big trade. And the difference between those can be quite dramatic, quite startling, the difference in your performance when you start putting the biggest money on the best trade opportunities. And taking it slowly but surely from that point onwards. But you've got to know how to build your edges. You've got to know what your edges are. You've got to try and recognize how to start reading the combination of factors that make great trades. Not just one. A lot of people say, but that should have been a buy. And then you look at the value and you say, wait a second, maybe it shouldn't have been a buy. But that should have been a buy. But wait a second, you never had any, you still had an awful lot of sell volume coming in. But wait a second, that could have been a buy, but you're way off a measured move and you've got a stop level right below you, and you say, wait a second, you should have waited for the sweep, etc., etc. So a lot of extras that we can build on top of some of these signals to try and make great trades happen, and that's what we're kind of focusing on. Anyway, sell side gold is still working for us. We've got yet another short gold. We sold gold here, got a scratch trade. We sold gold here, and that one took us down quite a distance. We've sold gold at the top edges again. You can see 3 trades, top lines. There's never been a buy trade yet on the drop. And 3 gold trades, all short, all making money, building edges, trying to find the right narrative. And it's going very good, sell side. The last sell, guys, was at 8s. It's currently trading at 5s. We've just made another $300 on a gold short trade, making some big monies selling gold off these last 3 tested highs here. So we're doing really good business here. 5s traded. We're on bid watch, but no buy triggers. On bid watch, but no buy triggers at the moment. So we're going to be watching for that as a possible trade. Obviously, again, looking for book buyers showing up, looking for leans, looking for Voltics, trying to get possibly a buy trade when it does show and grab a little bit of reversal business off the low prints. And we'll see if we can get a bit of action on the buy side of the book, reversing off these low prints at 4.5 at the moment. So gold on the short side, booking profits and getting ready for the buy opportunity. We say, why do we count down to the end of a minute? And that's another reason of obviously the whole concept of time sliced orders. When you time slice an order, usually the algorithm finishes at the end of a 60-second period, because up to the 60 seconds volume is always possible. As the volume comes into the end of the 60-second period, we start to recognize that the time sliced order is now probably complete. And once that time sliced order is complete, the probability is high that the price will then explode higher still. And obviously that's also more inclined to be the case when we head into the hourly charts, or the end of an hour, end of a quarter past hour, end of half past the hour. It's time to do business. So unfortunately, we're just a little bit out in terms of the timing of the current trade. Bottom edges, we would have expected it to have happened at 13.39. It did actually happen at 13.39. We just never got the trigger until it started to come off the 046 level. And obviously that's you know, just a little bit out of time, a little bit out of sync with the shape of the bracket that we're developing into at the moment. It's not got the biggest volume either. It's got a little bit of volume. It's not got a great lean. It's not got a great order book. It's a possible buy trade, but it's not very good as a possible buy trade at this point. We've certainly seen an awful lot better, and obviously based on that, we simply just say, well, it's not that good. I'm going to pass on this at the moment. Let's see if I can get a better price. Let's see if I can get a little bit better at lower prices to maybe take this trade onto my books. And that's what you've got to start thinking about. It might be a buy trade, but it's not going to be my buy trade just yet.